right. I mean, I know what you're thinking right now, okay? I know what you're thinking when you see this, okay? I know what you're thinking. I know what you're thinking, okay? Don't think about it. Do not think about it. Keep your hands steady. Do whatever you need to do to release your stress or whatever. Do not think about it. Here's the thing that I see that you don't.
Dudes and dudettes, this is Due Diligence here. This is what you guys been waiting for, right? All of the price prediction that makes you feel the comfort, you sleep at night, when you hug your beaver at night and kiss him or her on the forehead and just think about the price action every single morning. Yeah, this is what you've been waiting for, the price action thing. So today, we actually ended up with a pretty okay day, okay? I mean, I am super happy, as you can hear from the voice that I had from our previous video. The one that I just posted an aftermarket, not really just, it's been like 8 or 9 hours after now, because my prediction was actually right on point, okay? So let me show you something real quick. If you focus your eye on the top right hand side of the screen, around the up 7.45% to up 5.67%, right? You see this dot? You see here? You see this here? Around like 7.49 to 7.51. Does this one seem familiar? Well, guess what? If you go over here and look at my price chart, okay? The one that I drew early, very early in the morning. Look at the green line. What do you see? Ooh, what do you see? What do you see? That's exactly where it landed. You see? I mean, screenshot proof, right? This is not even there. Also, this is the third screenshot. And I screenshotted it at 9:57? Yeah, I think so, because there's time here too. Did it? Oh, it didn't got time in here. Wait. Let me go back to where this is. Yeah, right here, right? 9:57, and then I drew this entire thing, right? This entire the two waves, right? On around 8:45. So yeah, it's a pretty good day. Finally, I got the predictions right on a penny, which is pretty happy. I almost went out a little bit, like on like maybe 2 cents or something like that. But basically what those two lines represents is the likelihood of wave function. Like if you think about those two lines as wave functions, so basically at the end of here, the market close price will be trapped in between the yellow line and the green line if you sort of analyze it. Like, I don't know how to describe it. I don't know how to like visualize or how to conceptualize how I did this. But at this point, right now, at this point of this channel's longevity, because we have a long time ahead of us, right? We still need to wait until MMAT get to like $12. I'm not really touching anything until it reaches $12. That's why back in earlier in the intro video, I said I know you were thinking about, right, when it reaches this point. And a lot of you, especially a lot of you who are impatient, who only holds like stock for 1 or 2 days, you probably buy it back, like just listen to me, buy it back around here, right? Hell to all God 69 or 62 or whatever, right? And then you're like, oh my god, it goes over the 6.98 support line. You'd be like, let's just sell, right? So at this point, if you just buy it from market open, you already have around 10%. If you just bought it like around this 6.98 support line, you probably already get like maybe 5 or 6%, or if you sell it correctly, around like 9%. So basically your upside is already somewhere around like 5 to 8%. Like a lot of you probably decided to sell. But this is a very narrow point of view. The reason why I said, hey, like, I know what you're thinking, but hey, you gotta keep your hands like on your lap, or you gotta go do something, comfort yourself, self-fornication, or whatever you do to calm yourself down, right? Here's the reason why. Here's something that you don't see, but I do see. Because a lot of times you gotta see this in a very grand sort of picture, okay? So there are 4 hypotheses when you see a price action like this, right? So one hypothesis is It's a temporary pull-up. Temporary pull-up. That means it's a pull-up without any volume support, or a pull-up that is like so sudden that you know it's gonna drop. But in here, look at this, the slope of this tangent line. You see? It's almost at a 45-degree angle. That means it's gonna drop, it's gonna stabilize. But depending on like after like the peaks point, like you know like how calculus works, like when you calculate derivatives, when you have like say a standard normal term, like on top of here you have the slope of 0, right? So whatever the slope is, like around this point to that point, the acceleration point will probably like reset around like on top of here, right? So without getting into too much about math, so if you just say like there's always going to be in any curve or any like peak shaped curve, because every stock curve is like a sine cosine sort of thing, like bam goes down, like it's like asymptotical. It's never like a linear progression. So in this case, we will realize that around like usually on a normal price action, right? Like other than as a quote unquote short squeeze, but not really. Like a lot of the short squeeze titled stocks are not really short squeezing. They're literally just FOMO buyers coming in, and because there are too many shares in one period of time and there's not enough people selling, that's why you have a direct up, like a smaller than 45% price angle. Right, but in here, we know that it's probably going to peak around like the top it will ever get for this day, for the day June 30th, 2021 is $8, okay? When it hit $8, you will hit a key resistance line. So let's look at the key resistance line right here. So you will see a key resistance line at 793. That's why today we never hit the $8. If we actually went over 793, I will actually be worried, because I am in MMAT for the long run, and for those of you who are just holding it for 1 or 2 days, it's a really horrible habit, okay? I am going to make a video later on talking about why average retail players don't make money. Because if you look at the data, right, 90% of the retail players doesn't make money. 10% of you, or us in this case, we either break even or we make money. But in that 10%, there's only 1% makes huge returns. And if you look at institutional investors, they have a time frame of how long they hold their stuff, and they usually determine as amateurs is the person who holds only 1 to 2 days, because a lot of times volatility follows a curve like this, okay? So because volatility is essentially random, right? It goes da 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 da. Like one day it goes up and goes up, and one day it goes up and goes down. So in order for a day trader to make profit, you have to make sure that volatility is either on his tippy toes or on the lower end tippy toes. But for majority of the U.S. market, volatility is actually lies in the middle part here. Okay, we can also make a separate video on just this one. So if you look at the implied vol, or just look at the VIX index, right, you will find that a lot of times it's just surrounding the average line, going over and over and over again. Like all of these tippy toes, the lower tippy toes, and lower tippy toes are sort of anomalies, especially if you're just only trading one stock. But one of the reasons during and after COVID, a lot of day traders are making money is because a lot of you get stimulus checks. Right, for those of you in the beaver countries, I don't know if you guys have stimulus checks, but in the USA, you have this thing called stimulus check. Basically, the US government print a lot of money and give you like a couple of $1,000, and then a lot of you decided to, according to research, I think 60% of these stimulus money actually went into the stock market. So you open a Robinhood account and you use a stimulus packet, and a lot of retail players are actually like easily swayed. That's why Twitter and Reddit are heavily leveraged. So during those period of time, what a lot of like retail leads, let's just call them leads. I mean, I can consider myself as like a herd leader, I guess. I don't know, but I'd rather think about myself as your friend or whatever, right? So, for example, like let's make Matt a leader, okay? The leader of AMC movement, right? So people's gonna follow him. So whatever he buys, other people buy. So by doing this, you actually create a lot of FOMO squeeze. Not even FOMO squeeze. You can't really tell it's squeeze. It's just called FOMO volume. When you create a lot of FOMO volume, you create volatility. And when you create volatility, you create the situation what we call day traders heaven, right? But a lot of times, in order for a stock to be very healthy, you actually don't need that. You want something that moves like, sort of move like this moment, and you will have a temporary sort of like upside, and then you will form another like upper but lower base, and it will trade flat for a little bit, and then you see an upside, right? And then when do institutional investors come in? They usually come in around this point and come in this point. And so if we draw this in a grandiose sort of scheme, so let's do it. Let's do it like clearly somewhere that I don't have a lot of charting done. Apparently I have charting done everywhere. So let's do the weekly chart. It's not really that important yet, right? We might talk about this in about 2 or 3 days. So we're going to talk about the weekly chart. Why sort of in 2 or 3 days weekly chart is important, because we're going to talk about this, fail to deliver. I'm going to make an exclusive video on this thing, and weekly chart is really important when we're looking at that. That's basically an indicator for short squeezing. Right now, a bunch of YouTubers just started to, catching up on it. I was like, guys, like, what are you guys been doing? Okay, like I've been reading SEC rulings because I want to like give you guys as concise and as a precise of a understanding of how this thing works, and how fail to deliver leads to a settlement, and how the settlement leads to a ultimate cover, and how to expose naked shorts. And I also found back loops, or some loops, or some, let's just say, loopholes that hedge funds can actually avoid this. But we're going to talk about this in a separate video. And if you guys really want this thing, just comment down below, right? Smash that like button, subscribe, and comment down below. Be like, oh my god, dude, like, Due Diligence channel, like, dude number one, I really want to hear you talk about FTD, and I don't really care about the length of the video. I'm just joking. I know a lot of you don't really have the attention span, but I think from now on, what we're going to do is we're going to make a less juicy video that's shorter, and we're going to make a very juicy video that's longer. And we incentivize you guys to watch the longer video, even though both contents are separate and are different. But the longer content is going to cover a lot of in-depth stuff for those of you who really want to learn, and for those of you who really want to understand the financial market. Because if you think about it, right, if you want to invest your money, you risk your own money in the market. Why don't you learn more about the market than risk your money? Then you have a less downside risk, and you would probably see a better potential too, right? But anyways, a lot of YouTubers are picking up on this. And they're saying that the settlement day is plus 21. That's why I have some comments. That's why I didn't really reply to your comment. I don't remember what your name is, but one of them commented T plus 21. You want me to comment on July 23rd? Let me just tell you, this is not really the correct date. Okay. But again, in the middle of the video, I have to tell you guys, I am not a financial advisor. I do not give financial advice. Okay. But let's go back to MMAT, right? So what other things that I see that you guys don't see, right? So this is a 1 minute chart, okay? So on this line, what we called, it's not really what we called, it's just some sort of a charting sort of little secret I find out after trading for a little bit, especially when you chart the top point on when it's aftermarket, you actually can sort of figure out what the hedges are doing. But right now, we're not really going to talk about how to chart yet. I think later on we are going to talk about how to chart, because a lot of times what a mentor told me is you learn charting by just trading, and everybody's chart are not supposed to be the same. Like if you go on other YouTube channels, they're going to tell you like you should chart this, and this is support line, that is support line, but that's not 100% correct. I've read like 10 books on trading, right? All of their charting techniques are different, and they all have your charting technique should reflect your risk tolerance level. And if you guys want me to talk more about like what do you mean by you chart based on your risk tolerance level, comment down below too. Okay, there are a lot of just random trading ideas coming up. So and I'm sorry for those of you who just want to like look at price point and ask what I think. Okay, I'll just give you guys right now. I think tomorrow is going to trade semi-flat until it's going to reach around the $8 resistance line, and then we'll see a big upside. But I actually don't really want to see that per se, because I want the stock to trade low and steady and slowly dries out the shorts. But if you look at today's volume, right? If you look at the end of the market volume right here, you see you have a significant. So in here we have a buying volume of this much, and by the end of the market close, we have twice the amount of volume. But the manifestation of twice the amount of volume is you will see that we closed this around like 749, I think. Yeah, my prediction was just like that. That's why I was so happy, right? And then by having that much of a volume, you sort of push up the aftermarket price to around 793 support line, right? As I indicated before on the support line. But the thing is, when you're a hedge fund and when you're trading aftermarket with algorithms and everything, you don't want this line exceed $8, because if anything happens, like let's just say aftermarket we closes at $8, you know what's gonna happen tomorrow? It's gonna be a huge gap up, right? It's gonna be a gap up day. But then what happens on a gap up day like that? You would sell off, but we don't want to see that. We want to like consistent sort of long-term squeeze, which will just dry them out, and once it's squeezed, it might even reach over $20. And in the next few videos, I'm going to explain to you why a slow, drawn-out, long-term bleed-out squeeze is better than those of you who have very short attention span want it. What you guys want it is like, okay, I buy in today, tomorrow I want to profit, bang, I dump it. And then the third day, oh my god, it drops to another resistance line. I decide to buy it in again. And then the fourth day, bang, it went up by 20%. Oh my god, sell it off. No, you don't want to see that. Because if you do that, then it's very unhealthy for in terms of like a long-term plan for this company. And let me extend a little bit on what else do I see that you guys don't see, okay? So if you just do so this is a 1 minute chart. If you do a 5 minute chart, what do you see? What do you see? You can pause the video and just look at it, right? What do you see? From here, so that was from 1 minute chart to a 5 minute chart, and then from 5 minute chart to the 15 minute chart. What else do you see? Do you see more? Like what do you see? What do you see here? What do you see here? Comment down below what do you see here. Actually, I'm not gonna tell you what do I see here, but comment down below what do you see here, okay? And then an hour chart, like what else do you see here? This is important. Let's just tell me this is important, okay? You have to focus on this picture. Focus on here. What do you see? What do you see, right? You can choose to ignore all my lines, but you can also choose to use those lines at your advantage. But what do you see? What do you really see, right? All right. Also, just for you guys' information, I also made a Discord channel. And I'm going to drop the link down in description. But a lot of channels are not done yet, but you guys can still join and start like, communicate with each other. We're building a community, chat with each other, say hi to each other, make friends and all this kind of stuff. Okay. So I think this is for it for tonight. And we don't really have a distinct price prediction for tomorrow because I think it's sort of like a conflict interest sort of thing. I don't really want to see a huge update for tomorrow because I want to trade it flat for a few days. Wait until all of the share conversions are settled after July 2nd. And when it's on a Friday, it's probably not going to happen. So it's going to move on to Monday. And Monday, there's going to be influx of options, influx of money into the market. So I'd rather it trade it flat a little bit, or we sort of build up more steady resistance line rather than just go over $8 like right away. You actually don't want to see that because you want to bleed them out slowly and by slowly. And if we see a quick update tomorrow over $8, I mean, it's okay, but the problem with that is George is probably gonna, at around $20 line, the George is gonna be like, let us issue more shares. I actually don't want to see him issue more shares on $20. I want him to even see longer. We want to see a longer trajectory of plan. And for those of you going to be like, oh my god, we're going to be in this for a year. In a year, you probably will see a very significant profit if George doesn't fuck up a lot of things and if he actually listens to all the things we say in the Dear George video. And we're like constantly in the process of making it, and I think we're going to make a really good one. And again, thank you for you guys' attention. I know sometimes I ramble a little bit, but hopefully my information within the ramble and within what I talk about can make you learn and can make you think more about the charting, the analytics, and a lot of like, prediction or momentum and all those kind of stuff. Okay, because a lot of times, even though, as I said before, when I trade 100 days, I probably profitable on 90% of the time, right? But at 10% of the times, maybe you guys, later on in those years, because we decided to make this channel a long-term plan. So later on in the years, maybe all of you is gonna have really great trading ideas. And also, we're only human beings. We only have that much of a memory span, or that much of a ticker memory, right? So all of us can probably only remember or be in constant loop to looping about 150 tickers. There are around 3,000 tickers in the NASDAQ exchange. And some of you might just one day find a random stock, and maybe you just post it on Discord, and we do some due diligence, and we realize, oh my god, this stock have huge potential, right? And then we just do some due diligence together, and because we are not financial advisors, we do not get financial advices, right? But what we can do is later on we can have, say, like a YouTube fund or whatever, right? And maybe using that, we sort of manage our own money, manage our own risks, that kind of thing. I gotta ditch all the potential legal liability here. But anyways, guys, have a great night, and tomorrow morning it's gonna be a great day, and see you guys on the upside. I know, for all of you patient and loyal subs, you always stay to the end, and let me tell you why hedge funds is actually watching, or it's just either we have this consensus of how much this thing worth, or you're just watching my content, or maybe one day those hedge funds will give me an offer and be like, dude, you got it like right on point, so why don't you come work for us? So here's the thing. If you look at here, that's right, and if you look at here, what do you see? 3 resistance lines in a row, breakout, upside. No? Alright, hopefully you learned something when you stay at the end. This is great. I love to do sneaky beaky little stuff.